traffic from Beirut towards southern Lebanon, where those families, the hundreds of thousands who were displaced that had to leave the southern border areas, have been trying to go back. And they've been told by both Lebanese officials, and they've been told in quite strong terms by the IDF as well, not to rush into those villages and towns yet. And I think so we're in a situation where obviously a lot of Lebanese want to go back to their homes on the southern border. They want to go back to their homes in the southern border, but at the same time it's not clear whether that area close to the Litani River, where the ceasefire has covers, where the ceasefire specifically has been implemented, how safe it is, and the extent to which the IDF has kind of regards it as clear of any operations at the moment.
Yeah, I mean, that's the very short term. What about the longer term? What about reconstruction in Lebanon? Do we have any idea who's going to pay for it?
It's a huge question mark. We also have a massive question mark, obviously, over Gaza as well. There have been some comments today that suggest that because of this ceasefire, there's now more impetus for a ceasefire, or the beginning of, or the return and revival of talks for a ceasefire in Gaza. We've had Hamas statements today pointing to that effect. The Iranians have also quite cautiously welcomed what's happened in Lebanon, because I think they've been quite keen to contain the war and contain escalations as much as they can. But this question of reconstruction is going to be a huge one, and the Lebanese have been here before, and so have Gazans. So it's a massive question mark for the future.
Yeah, I remember going to Beirut and seeing the bullet holes still in the balconies, even in peacetime. But then what happens after this 60 days? You talk about potentially a Gaza peace deal. How does one lead to another?
Well, it sets the scene, I guess. It creates the mood music, if you like, diplomatically. But there's obviously this important component, this kind of elephant in the room, if you will, which is the Trump administration. So when he comes into office in January, there's going to be a lot hanging on how he wants to direct his Middle East policy, what his approach and attitude is going to be.
Okay, Bloomberg's Golnar Motavalli, thank you so much for taking us through that as if this ceasefire deal holds for the first day. It's been in place since dawn yesterday. We hope will continue for the rest of the 60 days and lead to a broader peace. But coming up on the programme, we're going to take a closer look at economies in Europe and the US with BMO's Jen Lee. Of course, we've got political turmoil in Europe, especially in France, but we are looking at the CAC 40 higher as in the session, higher 0.7%. French 10-year yields lower, 7 basis points at 2.95%. We shall discuss that and the hopes for a budget settlement, if they can get one, in Paris, coming up next with Jen Lee. So do stay with us for that conversation here on Bloomberg Markets. This is Bloomberg.
I think that it would be irresponsible for us to ignore the AI revolution. I think that as much as there is a lot of short-term hype, I think long-term it has the potential to be transformative. And so we are spending a lot of time thinking about what elements of it are structurally have barriers to entry, and so there is a winner-take-all element to that and which don't. And it seems to me that things like chips, things like infrastructure and systems has a little bit of that, because NVIDIA is so far ahead, it's expensive to catch up. There's, the technology that it requires to build these chips are sort of based in Taiwan. And what we're seeing is that some of the apps and some of the applications, there are no barriers to entry, right? Like, it's fairly easy to come up with, and I don't mean to belittle the complexity of it, but there are not moats around those things like they used to. So I think that there is less of a winner-take-all in that space. You're going to have to earn that spot, whereas it'll be fun to watch what happens. And I think there's going to be a lot of money burned in the process because somebody will develop something and a fast follower will come along and make it better and cheaper, because data gets cheaper and more pervasive, and it's going to be easy for new players to come in and do interesting things. So I think we wait and we see.
Morning from our world headquarters in New York, I'm Menace Credit.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday, only on Bloomberg. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Welcome back to Bloomberg Markets. I'm Lizzie Burden in London. It's just coming up to 3:30 p.m. here. Happy Thanksgiving if you're celebrating. It does mean that US markets are closed, but here, European equities, it's green across the screen. The Stock 600 higher nearly 0.5% currently. The CAC 40 higher 0.6% despite the political turmoil. The DAX higher 0.8%. It's all a happy day, really, but thin volumes, as I say. Break it down by sector. Tech still leading the gains here, and Wall Street futures also pointing higher. But if we flip over to the cross-asset picture, euro-dollar a touch weaker at 105 handle still. The yield on 10-year oats weaker 7 basis points at 2.9%. Brent trading at $73 a barrel after OPEC Plus delayed its meeting to December the 5th. And you've got gold there trading at $2,638 an ounce, stronger 0.1%. But let's get more now from Jennifer Lee. She's BMO Capital Markets senior economist. We can take a look at what's going on under the hood in Europe and the US. Good to have you with me, Jennifer. I want to start in the US. We had this bump in core PCE yesterday. Does it knock a December Fed cut off the table?
Well, first of all, thank you very much for having me on today. The PCE report overall was, I'm going to say, broadly stronger, even though, there was a softer spending figure for the month of October. But it looked like that consumers were still spending on lots of areas, especially the key discretionary areas like dining out, staying at hotels. So there's some traveling going on. Recreational goods and vehicles, for example, that was still a lot of purchasing on that front, and clothing. So the only part that was a little bit dicey was the fact that the core PCE deflator was still a bit sticky, and that sort of kind of focuses on the inflation front. We saw the latest CPI figure for October as well for the U.S., also a bit stickier as well. So it puts the whole December rate cut narrative, under the radar, of course, and it's still very much undecided. We at Bank of Montreal, we are still sticking with our rate cut call, again, where everything is going to be data dependent. But right now, it looks like, it's still coming down enough, and give enough clearance for the Fed to start cutting again, or to continue cutting in December. But once 2025 rolls around, all options are open, and we'll have to see how things go.
Yeah, a lot of uncertainty heading into the new year with Donald Trump, of course, taking the White House again. I wonder where you've seen this rise in the US savings rate. Do you interpret that as the consumer, though, getting more cautious? Of course, we're thinking a lot about the health of the consumer given the Thanksgiving holiday.
Yes, well, it's interesting because it does have its ups and downs, obviously, right? And I like to think that with wages and salaries still rising, that's the big, I think that's the most important factor for the consumer is that they continue to see, or the workers at least, continue to see steady increases in incomes. It was up 0.5%, which is matching the average over the past year. So as long as all the workers continue to see a steady income, getting a steady paycheck coming into their bank accounts, that is key. And yes, I think they're going to be putting aside a little bit for a rainy day because there's still uncertainty about how things are going to play out. At the same time, it's interesting because a recent poll was showing that consumers want the president-elect to deal with high inflation and high food prices and grocery prices as one of his first things to do in his first 100 days. So we'll have to see how that pans out. But right now, consumer confidence is high or is higher because, there's a lot of hope coming in with the new administration.
And given that uncertainty, if we look to the ECB now, why would they cut by 50 basis points if they could wait and see what Donald Trump's going to do? And given that there isn't that big of a gap between the December and January meetings, what do you reckon?
Oh, so everyone has been, all the ECB governing council members have been pointing to a rate cut in December. So I think 50 basis points is, I don't think that might be discussed, but I think 25 basis points is the most reasonable move right now. It's going to be, again, as President Lagarde has always said, data dependent, meeting by meeting basis. So again, it's only going to be depending on how the data play out. And of course, most of the data have been weak recently. Latest German inflation report came in a little bit better than expected. That helped pave the way for a 25 basis point cut in December. But again, everything's going to be up in the air, and we'll have to see how the new president, when the president-elect comes in and takes over on January 20th, we'll see how things pan out on the tariff front. But I think Europe is also quite nervous because Europe also has a trade surplus with the U.S. So they want to try to figure out how they're going to avoid tariffs with the U.S.
Yeah, I mean, Christine Lagarde, of course, encouraging negotiation rather than retaliation in an interview with the Financial Times. I wonder, though, when we talk about Germany and we talk a lot about its economic weakness, I wonder whether you think it should be learning from the periphery in Europe. I was speaking to an ECB official the other day that was pointing to success in Spain. Maybe that's something that we should be thinking about.
Oh, interesting. Okay, so Spain has actually been doing extremely well, but I think every country has its own unique, the own unique situation it's dealing with right now. And Germany has had a lot of problems. With the energy crisis, of course, heavy reliance on China, a slow transition to EVs, and of course the political situation isn't helping at all. With the coalition falling apart and having a confidence vote later on next month. So it's difficult to put policies through. But where I am heartened is the fact that it sounds like more of these government officials are turning around and sounding a little bit more relaxed about, or at least sounding more flexible about relaxing the debt brake a little bit. And even Angela Merkel came out and said, that there's a time and place for it, and now it's time to change things up a little bit, and it's time to change the debt brake and release it a little bit and at least relax it. So there is hope for Germany as well, I think, on that front. But it's still a long time coming.
So you're confident that Germany can regain competitiveness? Do you see a willingness to implement Mario Draghi's report?
I think there is willingness to do something. Whether or not they're going to be able to implement everything he says in that 400-pager report is another story. And then, of course, it requires a lot more spending, right? $800 billion or 800 billion euros per year. And a lot of governments right now are sort of unwilling to spend. You've got, France, for example, trying to pass its budget. And I don't know how that's going to fare. But, they're trying to rein in their spending, and the opposite of Germany, where we're trying to actually get into them to increase their spending. So a lot of difficulties on a country-by-country basis. But, obviously, what Mario Draghi has to say is very important, and I think everyone is on board with it. It's just how to get there is the big question, and it's going to take a long time before we can get to an agreement on that.
Jennifer, I just want to end right here where I am in the UK, because I know you've been known for your forecasting on the pound. The Bank of England's been relatively cautious by comparison to other central banks. There's no talk of jumbo cuts here. Are we going to see strength for sterling in 2025?
Oh, you know what? The currency market has been almost impossible to call. I will say that. But I'm a little bit more relaxed, I guess, with the UK, only because the UK it's not as worried, I don't think, about tariffs with the US, because they actually have a little bit of a deficit with the US, or at least it's a very small, almost balanced trade with the US in some ways. But I think the difficulty is getting everyone within the NPC to figure out what they want to do, because even though you've got the extreme dove, but then of course everyone else on the other side of the equation is split between hawkish and dovishness. So it's sort of, and even between the Bank of Canada governor and their chief economist, they can't agree either. So there's a little bit of difficulty there. But we still see the Bank of England cutting rates, but not until February, and maybe about 75 to 100 basis points for next year. So hopefully we're going to see maybe a little bit more stability on the pound. But again, everything is going to be up in the air depending on what happens on January 20th, 2025.
Yeah, indeed. They've been singing from a lot of different hymn sheets over on Threadneedle Street. Jennifer Lee, Senior Economist at BMO, good to talk to you as we look ahead to 2025. Now, Americans are hitting the road and the airports for the Thanksgiving holiday, but that's only a sample of what to expect across the globe as the holiday travel season ramps up. We're going to discuss that next. This is Bloomberg.
European countries need to think, do you want to compete as a small country or do you want to compete as Europe? I don't think they have a choice, because the US and China have already started the race, and Europe needs to follow. There isn't a European company in the top 20 largest firms in the world. That is a problem.
But what does it mean for individual countries within Europe?
You can have more control and less growth, or you can have less control and more growth. If countries trust each other more and they build more European champions rather than each country having its own national champion, growth is going to be better, productivity growth is going to be better, the welfare is going to be better. But there is going to be less control at the national level. So right now, each European country wants to have its own telecom company, its own couple of large banks,
Its own bank,
its own large energy companies. And the question is, are you willing to surrender some of this control to European firms, which are going to be more productive, but you are going to have less control at the national level?
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Romaine Bostic in Detroit, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura at the G20 Summit in Rio de Janeiro, Brazil, and this is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
This is Bloomberg.
Welcome back to Bloomberg Markets. It's 3:42 p.m. here in London, and it's Thanksgiving. Happy holidays if you're celebrating. You might be flying, because in the US, Americans are getting ready to jet off for what's set to be the busiest Thanksgiving travel day ever. So let's take the temperature with Bloomberg's Sid Phillip, who joins me now on set. Sid, I wonder what's expected this Thanksgiving travel season. Is it going to be busy compared to previous holidays?
So, Lizzie, this is going to be the busiest Thanksgiving travel period for all time. So the TSA has said that there'll be 18.3 million people traveling during the holiday period. So there's a lot of people traveling, and lots of people going through security, lots of people getting on airplanes, and obviously everyone's looking out to see if there's any disruption coming. So far, travel seems to have sort of been all right. It's been smooth sailing, but there is some talk about there may be some bad weather coming into the Midwest as well as the Northeast, and that could potentially disrupt some travel if you're sort of leaving it to the last minute to get home to your families. So it will be an interesting travel period, and especially for the US, which has seen, the airline industry has sort of seen such a huge surge in demand as they've gone through this year. This is sort of a continuation of that trend where people are sort of traveling as much as they can to go see family and friends and everyone else.
But are they all heading home, or are they jetting off on holiday? Are they going to cheaper places than flying back to the US, perhaps?
They could be. I mean, there's lots of people who are, obviously going home is a big part of the American tradition of Thanksgiving, but there is a lot of people traveling to different places. And, the airline industry the airlines are sort of laying on the flights, they're sort of adding on capacity, and capacity is constrained. So there are sort of, the flights are expensive. So there may be people going to more exotic locations instead of going home. And so that could potentially see lots of travel there as well.
Yeah, that's interesting. We've also, of course, seen Spirit Airlines bankruptcy. What does that mean for travel?
Yeah, the Spirit bankruptcy is an interesting perspective. So while the bondholders will get control of the company and the shareholders will be wiped out, the airline has said that it will have zero impact on passengers and their staff and on their planes, essentially. So essentially the airline has talked about how they're going to keep going, they're going to keep flying, and they've asked people to keep booking with them, obviously, as they sort of go through the Chapter 11 process and look to get on the other side. They sort of are trying to get business going and keep sort of passenger flows coming in, otherwise it'll be pretty bad for their overall business.
Yeah, so in general, what are the airlines doing to get this travel going? I absolutely hate when my flight is delayed or cancelled. Are they offering refunds, points, miles? What are they doing?
So this will be the first test of the new rules that the US government, the DOT, has put in place. So where they sort of mandated automatic refunds for cancelled flights, as well as compensation and sort of standards, which we've seen in Europe for a while with the EU 261 rules. And so this will be a major test of that. So essentially the airlines are meant to give passengers an automatic refund if their flight gets cancelled as well. So, and the US government has talked about how they're sort of waging war on junk fees, essentially, for seating and everything else. So it will be interesting to see what the various airlines do and how they respond to it, and whether or not those rules actually function.
And when we think about the chapters of the airline sector's health, are we still calling this revenge travel, or have things stabilised a bit?
It's sort of become an unequal sort of recovery. So essentially, revenge may not be across the board. We've seen like the ultra low cost carriers, which were sort of booming during the post-pandemic era. They sort of has seen business going slow a little bit, whereas the full service carriers like Delta and American Airlines and United are seeing passengers continuing to fill up planes, especially the front of the planes. So that's like the sort of business class and the upper business class and the first class cabins are actually going full. And so there is a sort of dichotomy in the travel industry recovery. And essentially, while it may not be fair to call it revenge travel for the back of the plane, revenge travel is certainly in full swing in the front.
That's really interesting. We had the EasyJet CEO recently saying on Bloomberg that, they had this record summer, beat in last year's record summer, and they've managed to reduce the winter losses in the airline. And actually, this is a phenomenally good time for them. So maybe also for EasyJet within the budget airlines?
So EasyJet's a different sort of case in the budget airlines because they fly to main airports, whereas like the Ryanairs and others fly to the smaller airports, and therefore there may be some dichotomy there. Ryanair has sort of talked about how there has been pressure on their fares, and they've had to cut fares to boost demand. So it hasn't been equal. Also, the Ryanairs and Wizz Airs have struggled with planes and capacity. Wizz Air obviously has their issues with their Pratt & Whitney engines on their A320s, and while Ryanair can't get enough 737 MAX jets. So both those airlines are struggling at the moment in terms of adding capacity and getting capacity in the air, whereas for EasyJet, they've got the sort of right mix with the A320s with CFM engines, so they haven't really been affected as much. And so Johan Lundgren, who's the outgoing CEO, has sort of seen business going through a really good time for him.
All right, well, Sid Phillip, well, thank you for taking the temperature of the airline sector this Thanksgiving holiday. Good to have you with me, as always. And coming up, we're going to continue our conversation about the health of the consumer. We're going to hear from the CEO of consumer products company Unilever about the company's turnaround efforts and how it's navigating the geopolitical tensions. Stay with us. This is Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show, weeknights at 8 p.m. Eastern Time, right here on Bloomberg. Context changes everything.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
To one of our top interviews now, the multinational consumer goods company Unilever is working to fine-tune its business strategy amid geopolitical turmoil. CEO Heinz Schumacher tells Bloomberg's Francine Lacroix about the company's decision to pull out of Russia and how it plans to navigate possible US tariffs.
Yeah, I mean, tariffs and protection is always disruptive for businesses that operate globally, and I recognize that. But hey, if it's a reality, then it's a reality. I think what we have been doing over the last few years is, in general, after COVID, we have made our markets in general more self-sufficient. Right. So if you look at, for example, our China market, it's essentially self-sufficient. India, for sure, is. The US is mostly self-sufficient, with some imports, though, from Mexico, but that is not material to the group. It's not significant. And we have a fairly agile supply chain that, if the situation, if it comes to that point, that we could reallocate our production from those factories to other parts in our network and make the US probably even more self-sufficient. So, hey, we are adapting fast, we're agile. It's not of material impact to the group, but we're obviously watching it very, very closely.
I mean, does it influence your decision on where to cut jobs?
No, at this point it doesn't. No, we have made an announcement on a restructuring program that you're probably referring to in March. 7,500 people, because we felt that was for 2 reasons. One, we are making the organization ready for a Unilever without ice cream, and that needs to be a lighter organization. And we wanted to be ahead of that demerger and take measures now. So that was reason one. And reason number two, we have changed the structure. I talked to you about strategy and structure. We've changed the structure to be faster, to be able to scale these brands faster across the globe. And when you do that, you need to take the consequences that, hey, it can be a bit. We can be more efficient, and that's what that's what we're doing.
But you worry about unfair advantage for some of your competitors that are based in the U.S.
Yeah, our competitors. We are based in the U.S. The U.S. is our biggest market.
You're not headquartered there. So someone like Pepsi, do they have an advantage under Trump if he puts America first?
No, I don't think so. I think we have been in the U.S. for decades. We can, it's our largest market. We have phenomenal U.S.-centric brands. I talked about Prestige Beauty, but also brands in well-being, such as Liquid IV, such as Olly on the VMS side and on the well-being side. So, we are in many ways, in that market, we are an American company, and I believe that the U.S. government has every interest to work with companies from overseas who are active in America to promote investment in North America, to care for jobs, to do the right thing for that market, and that's what we're doing.
So you also divested, of course, what you had in Russia. Maybe some of your U.S. competitors won't have to going forward. Was it a mistake to get rid of it?
Russia was something that was a very difficult decision to make. I found that in my last 1.5 years, it was arguably the most difficult decision to make. But I did make it quite soon, in the sense that I wanted to create optionality for us to exit that market, and that was a tedious process. So it took us more than 12 to 14 months to come to that point that we were able to exit. And at some point in September, I felt I had the optionality on the table, and it was difficult, but I made the decision to go, not because of the war that's going on right now, but because I felt that the control on our business was coming down. I feel that ultimately, if you're a global company, you need to have control of your operations. We need to be able to review results. We need to be able to get the cash out of the country ultimately. We need to be able to make sure that we live up to potentially international sanctions. We need to be able to control our brands and where our brands travel. And that was something that I felt wasn't enough anymore, and I didn't see a window into the near future where we would regain that control, and that drove the decision to exit.
And talk to me about Ben & Jerry's. So the way that Ben & Jerry's was set up was also having an independent board. Will that still be the case going forward, given actually, a lot of the questions that you've just been telling me about?
Yeah. No, Ben & Jerry's has an independent board, and that independent board's that looks after the social mission of Ben & Jerry's only. So it's not a board that looks at the business side of Ben & Jerry's, because that's what we do, but it looks after the social mission that's there. That was agreed at the time that Unilever acquired Ben & Jerry's. It's in the merger agreement, and we absolutely respect that merger agreement. And therefore, the new ice cream company that will be demerged will respect that merger agreement.
Is it tough when, the politics gets into selling products?
I think, in the case of Ben & Jerry's, look, that brand, we acquired it, I think, at a sales level of 120 million or something like that, and we've grown it to a more than $1 billion brand. It's been growing very successfully, and part of the success of Ben & Jerry's is a social mission. And the way they speak out and the way they speak up, and as long as that fits, the brand, peace, love, and ice cream, I'm all for that. It's a wonderful thing to do. You need to be careful that, as a company, that you don't take political sides when that's not necessary. So, sometimes that brings a certain tension, but I believe it's a healthy tension. They keep us on our toes, and it's a great brand. I love it, and I'm sure it will be successful going forward.
So that was the Unilever CEO, Heinz Schumacher, and we'll have plenty more to come. This is Bloomberg.
Asia is a continent of contrast. The region is a nexus of rich cultural traditions and a vibrant hub of trailblazing innovation and modernity. How will it push the limits of technology even further?
Going to space should become as easy as, taking a flight.
If NASA is designing a lander, their approach is they're designing a Formula One car. So we take, say, a Jeep approach.
Minso, give us a sense of how you translate Korean architecture for the rest of the world.
We call this madang. In general terms, it's where we can be ourselves, where we belong.
There is an old saying in Korea that says, "Komi blue, hwai 불치." It means simple but not humble. So it has a tremendous impact on Korean architecture.
People tend to think the robot AI taking the job from them. We want to use the robot as a basic asset, meaning people have an income through the robot.
From space tech in India to robotics in Japan, Asia is driving the future, reshaping industries, societies, and the way we live. Join me as I take you through the bold innovations. Discover Asia's next-gen technologies on Momentum.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Welcome back to Bloomberg Markets. I'm Lizzie Burden in London. It's just coming up to 4 p.m. here and it's 11 a.m. in New York. It is, of course, Thanksgiving. Happy holidays if you're celebrating. It does mean that US markets are closed. It's thin volumes everywhere else, but European equities are in the green. The Stock 600 higher 0.4%. The FTSE 100 ever so slightly in the red, but the FTSE 250 up 0.7%. The CAC 40 in Paris actually managing to eke out 0.4% of gains despite the political turmoil, though concessions have been made by the finance minister to the national rally. We have the sector breakdown switching up a little bit, actually. Banks leading the gains. They are higher, nearly 1%. Bottom of the basket still, though, consumer products and services here in Europe. But as we look ahead to Wall Street, S&P E-mini futures are higher 0.3%. NASDAQ futures higher 0.4%. And if we flip the board over to the cross-asset picture, you can see there euro-dollar at a 105 handle, weaker 0.1%. The 10-year oat yield at 2.96% as we digest this turmoil, but lower at 6 basis points. Not quite at the level of Greece's benchmark yield, which the oats had matched for the first time ever earlier today. Lower now, as I say, because of these concessions politically. But Brent trading at $73 a barrel, stronger 0.3% as we head towards this OPEC Plus meeting, delayed as it is now to December the 5th, and gold trading at $2,637 an ounce, just a touch stronger there. But let's get back to Thanksgiving, as important as it is. We've got Americans off eating turkey today. We've got the Black Friday sales kicking off on Friday. It's an important opportunity to take the temperature on the US consumer. So let's discuss now with Andrea Clack-Rogers-Varnado, consumer brands and retail expert who currently serves on the boards of Umpqua Bank, Red Robin Gourmet Burgers and Pattern Beauty. You're a busy woman. Andrea, just tell me how you think consumers are going to fare here. They've got inflation, they've got interest rates to contend with. How's all that going to impact their shopping habits?
Well, you are exactly right. There are a number of different economic indicators. That's really a mixed bag. We've heard today that consumer sentiment and purchasing power is at a high. But at the same time, we are still dealing with elevated interest rates. And even though inflation is easing, many consumers are still comparing their purchasing power mentally and emotionally to what they saw post-pandemic. And so there are really three trends that we're going to see when it comes to shopping this year. Really, we're looking at the commodification of shopping. With more online retailers and e-commerce, delivery, service, shipping becomes just as important. And so you will see customers trading off quality and price point for delivery and service. You'll also see some testing of our consumer values. We've talked about sustainability and doing the right thing for the world. However, we've seen sustainability come at a higher price point. And so you'll see customers trade off on that delivery and convenience and sustainability. And then finally, we've been talking about value. When all of those economic indicators come together, there's been a focus on value. But it's not just value from a price point perspective. Customers do want something that does help them save a little money. However, they're looking for longevity and function. They want to see a return on that investment. And so what we'll see in this shopping season is we'll see more customers purchasing functional items, heirloom items like jewelry, and even productivity, smartphones, tablets, things that they know will have meaning and have that lasting power for them.
I mean, how much do you think consumers will be willing to pay for sustainability? Will they keep paying this premium given you've got the cost of living higher at the moment?
You will see a bit of that trade-off, and I think we'll see sustainability come in different ways. Previously, we've talked about how the product is made, and so customers have really been focused on the inputs, the raw goods, the material, or even the off-gassing. But what we'll likely see is more of an impetus towards recycling and upcycling, reusing products, and customers and retailers will focus on their packaging, so things they can still bring in at a lower price point that still help the environment. And so that's where we'll see a shift in our sustainability efforts this year.
Do you think that it would be generational? Do you think younger generations would be willing to pay more for sustainable products, or can they actually afford to do that?
That's a great question. We do see that many younger customers are saying that this is really important to them, and we are finding that they are willing to trade off. They aren't as focused on the volume of product and more about the quality and experience that it delivers. So what I think that we'll see is a higher price point on these items that are good for the environment, but we will see a lower volume in that generation of purchases altogether so that they can focus their pricing and their purchases on the products that really matter.
How much does this trend of prioritizing experiences over material goods continue? Does it fade as economic conditions improve and inflation comes down?
It shifts, and it looks a little bit different than it has in the past. In the past, when we've talked about experiences, we've really focused on travel. But I think this season, what we'll see is more focus on entertainment, concerts, time together, even dining experiences. And so still these experiences will happen, but they will just happen at a lower, more moderate price point that might not be the multi-day excursion that we've talked about in the past.
And so how do retailers, traditional retailers, kind of tap into that trend of needing to focus on experiences?
Oh, that's such an exciting question. It really is in the retail environment, tapping into that consumer need for meaning and experience and stories and things that they can share in these social moments or even experience. And so you'll see retailers start to bundle services and experiences with their products. For example, I'm going to sell you a coffee machine, but then I'm also going to offer you this barista workshop. And so that way you have a bit of a return on your investment. You're learning a new skill. You can do that with a family member. And you'll see retailers start to bring in skills, workshops, experiences, classes, and things of that sort to tie directly to their product purchases.
Indeed, we were just playing a little package about the Bloomingdale's collaboration with Wicked, so an experience to behold there. Just finally, what other trends are you expecting to see this holiday season as we end the year, Andrea, in the US?
Sure. I think we'll see retailers continue to double down on limited time offerings. We've talked about the digital convenience, whether it's these international marketplaces that are able to sell products at a much lower price point than we've seen in the past. Some of your branded retailers will say, how do I compete against that? Because I might not have that shipping speed or inventory. And so what they'll look to is they'll look to bundling services. And I think customers will be really receptive of that because as they're looking to, whether it's design a room or have an activity, they'll also look at these limited time offerings. You mentioned the Bloomingdale's collaboration with Wicked. You'll see much more partnerships and opportunities for customers to meet directly with brands, and it gives that urgency and time. And then finally, I think what we need to remember is that this is a shorter shopping holiday season, the way Thanksgiving has fallen. And so we will see some really interesting peaks and cycles, I think, as many customers realize it's mid-December and they need to make their purchase before Christmas. So I think we will see a shift in days of purchase and volume and activity.
Do you think that the re-election of Donald Trump affects their shopping habits at all? We've talked about him affecting pretty much every other topic we've mentioned on the program. What about the US consumer?
Well, I think that it creates a level of uncertainty that consumers are looking for. And so they will be looking over the next 6 months, probably be a little bit more cautious in their purchasing as they determine what policies are enacted. Everything from tax cuts to tariffs and how that will affect the supply chain, I think will have an impact on how customers think about their next 3 to 6 months. And then once a new presidency takes office, just because it's a shift in economic policy, we'll have much more visibility and foresight. And customers, whether it's negative or positive, customers will have more confidence in how they should purchase because they'll understand what the policies look like for the next few years.
All right, Andrea Clark-Rogers-Varnado, consumer brands and retail expert. Good to have you with me. I'll let you go and enjoy your Thanksgiving dinner now. Thanks so much for being on the programme. Coming up, we're going to come back to Europe, and we've got France's benchmark bond yield matching that of Greece, or it did earlier in the day, for the first time ever. We're going to discuss that next and how the political crisis there is going to unfold. So stay with us. This is Bloomberg.
We felt strongly that there has been an opportunity for there to be an experience on mobile that is centered around gamers. Like, we talk a lot about how there's 3 billion gamers in the world. 2 of those billion play on mobile, and half of those actually play on mobile and they play on another device. But there isn't actually a gaming platform and store experience that is centered around players and goes truly across device, where who you are, your library, your identity, your rewards, that travels with you versus being locked to a single ecosystem. And we've recognized that opportunity for a long time, but we wanted to make sure that anything we built was really grounded in people who play those mobile native games and the creators of them. And so being joined with a team that has real deep expertise in mobile was important to us.
As we spend some time here on the broader presidential race,
let's focus in on European politics.
Makes you wonder how politics might play out.
Season is here.
This earnings season tells us there is more to life than mega caps.
Bloomberg is first to break the numbers.
Let's talk about Deutsche Bank here.
BASF with that big exposure.
We have numbers from Barclays, from Hermes, Anglo-American.
We've got a lot of earnings to work our way through.
With the smartest insights.
I think the BBVA has posted really a very strong set of results today with that bottom line.
Somewhat cautious on Q3, but I think it's in a better place than it was.
Continuing coverage on Bloomberg.
Let's get over to France now, where the rate on 10-year French notes, traditionally considered among the safest in the euro area, at one point today matched Greece's for the first time on record. The latest milestone in a week marked by mounting anxiety over the fate of French Prime Minister Michel Barnier's government. We can speak now to Bloomberg's Alan Katz for more on the latest developments, because there have been more, Alan. Since we last spoke, National Rally President Jordan Bardella has been saying that the concessions made by the Finance Minister are actually a victory for National Rally. I wonder if Michel Barnier can breathe a sigh of relief now, or whether it's a sign that he'll give an inch and they'll take a mile.
Hey, thanks for having me back on. I think the answer is maybe the latter. As you pointed out, Jordan Bardella did say this was a victory for them. The victory that he's talking about is Michel Barnier's announcement that they would not raise taxes on electricity, as had been previously planned. The National Rally, the far-right National Rally, has positioned itself as they're trying to protect working class and middle class people. A smaller decline in electricity prices would have hit a lot of their voters in the pocketbook. So this is something that they really can take home as a political victory. They say they're going to push for a whole series of other concessions by Barnier's government. Whether or not Barnier agrees to those is another question. But what we do have is actual movement after several weeks where the RN has become more and more strident in its statement, saying that it was going to vote for a no-confidence measure to push out Prime Minister Michel Barnier, maybe as soon as next week, when the first one of these no-confidence votes is likely to be held. Now we have the government moving on a particularly big pocketbook issue that the RN's been talking about for quite some time. And so it does seem like there is the beginnings of this shift that might end up with the National Rally agreeing to abstain on a no-confidence motion that would allow Barnier to continue, but we're not there yet. As you said, they will try to, he's given an inch, they're going to try to take a mile.
Well, let's take a look at what Marine Le Pen of National Rally has been saying. If potentially an off-ramp, but a lot of strong rhetoric from her. Take a listen.
If the budget stays the same, yes, this is not a surprise. We always said it for the past 3 months. I'm telling you, if this budget is not approved, the budget of last year will apply, and actually it's not as bad as this one, as there are less taxes for the working and middle classes.
So, Alan, they won't raise taxes on electricity. That's the concession from Michel Barnier. But what's it going to take to get Le Pen to play ball?
Well, they've said they want several other things, some of which are doable and some of which are less doable. Among the items that they want is an indexation of retirement payments that was supposed to be delayed, or part of it was supposed to be delayed from January to July. They want all the increase that's tied to inflation to be paid out in January, as was initially planned. They want some things for their base that are not really budget related, such as a big reduction in medical payments for illegal immigrants. If illegal immigrants search for medical care, they can actually help get those paid by the government. And there's a series of other measures, again, some of which are certainly possible for the Barnier government to do, and to do relatively easily politically. It is short-term decisions that can be made on eliminating some tax increases that they previously planned, some of which, like structural reforms or reductions in payments to the European Union, which really can't be done quickly. The question becomes, are any of these really things that Marine Le Pen and the National Rally would actually now nevertheless go and push out the Barnier government over something like this, bearing in mind, if that happens, the budget goes out the window, and it really and all these gains that they're now getting, this victory that Bardella just tweeted about, disappears if they do so. So it's not at all clear that those comments from Le Pen that you showed earlier, they were from I think yesterday or the day before. It really has changed now that Barnier has started to give some of these concessions.
Okay, just from a market's perspective, I really don't want to overblow the significance of the fact that the French 10-year borrowing cost is matching Greece's for the first time. It's lower now. Is it a red herring, or is it actually an important marker?
I would say both, actually, because the reason that France's borrowing costs have matched Greece's earlier today is less about France, actually, and more about Greece. Greek borrowing costs have dropped sharply over the last 6 months, and it's because Greece has really gotten its fiscal house in order, and it's become, in many ways, the darling of bond investors among European countries because of that. So as a result, Greek bond yields have dropped much more sharply than, say, French bond yields, but both are actually on a declining path at the moment. That said, France really used to be sort of the next best thing to Germany for a lot of investors, right? It was a big European country that was sort of viewed as really almost as safe and as Germany. There used to be maybe 20, 30 basis points between the two. Then that widened to more like 50 basis points for quite some time. Now it's widened more to 80 to 85 basis points. And so bond investors do view France as riskier and less the darling than it used to be. So in answer to your question, okay, yes, it's not that saying that France is in terrible straits with bond investors by making that Greek comparison, but it does show that there is tension in the French bond market, and people are a bit worried about, one, this political crisis and what's the denouement for it, and two, France's deficit, which remains really quite large.
Yeah, and indeed, it's not just the bond space, it's stocks as well. The CAC 40, the second biggest underperformance since the euro began. You can see it relative to the stock 600, the underperformance there. But today, not really playing out. The CAC 40 higher 0.5%. And in fact, the French banks, BNP Paribas, SocGen, Crédit Agricole, all in the green, perhaps because of those concessions that you mentioned, Alan. Alan Katz in Paris, we thank you for that analysis on the political situation and how it's being read in the markets in France. But coming up on the programme, a 60-day ceasefire between Israel and Hezbollah does seem to be taking hold. It's prompted southern Lebanon residents to return. We'll bring you all the details next. This is Bloomberg.
Season is here.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
We're scaling up at incredible pace.
This region is growing so rapidly. The opportunity is really huge.
Only on Bloomberg. Context changes everything.
Good morning from our world headquarters in New York. I'm Menace Credit.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday, only on Bloomberg. Context changes everything.
Welcome back to Bloomberg Markets. It's 4:20 in London, and we are looking at Brent having slipped into the red, but back into the green, higher 0.2% at $72 a barrel. Traders, of course, considering this delay to the OPEC Plus meeting now on December the 5th, but also the geopolitical backdrop. We have residents of southern Lebanon returning after a 60-day ceasefire between Israel and Hezbollah has taken hold. Let's get more on the easing tensions in the Middle East now with Bloomberg's Golnar Motivali, who joins me on set. We had this ceasefire in place since dawn yesterday. How is it holding up? How are the two sides receiving it?
On the ground, from what we've heard, it seems to be holding up from a military point of view, but there is a huge amount of movement, obviously, now from Beirut towards southern Lebanon. You know, about more than 1 million people were displaced in Lebanon as a result of this conflict. And so there are huge numbers of families now trying to move back to their villages and their homes. Now, the IDF has said, and the Lebanese government as well, have told them not to rush back, that they don't have the all clear or the green light yet in certain villages and towns. And there have been reports of some attacks by the IDF on some, what they claim are Hezbollah facilities and positions south of the Litani River. So for now, it seems to be holding, but there are concerns about the way and the means by which people can actually get back to their homes in Lebanon.
I mean, do they have homes to go to? What about the reconstruction in Lebanon? Who's going to pay for it?
There's been a huge amount of destruction, as we can see, not just in southern Lebanon. Obviously, the concentration has been around there, but there are other areas of Lebanon and also many parts of Beirut that have been affected. Basically, anything that was seen as a Hezbollah-linked target of any kind of identity or persuasion appears to have been bombed or attacked in some description.
And of course, there are hopes diplomatically that this ceasefire is going to lead to a broader peace deal for Gaza. Have we heard anything about progress on that?
We've had some signs from Hamas that there's a kind of willingness now, I think, to revive those ceasefire talks. But a lot of this also depends on Israel and what Benjamin Netanyahu wants to do. And obviously we have this big elephant in the room in the shape of Donald Trump, which, you know, we don't know how he's going to, or we're not sure exactly how he's going to conduct his Middle East policy this time around, whether it comes to Israel and relatedly when it comes to Iran as well.
Yeah, it's a spectre that hangs over every single topic that we're discussing on the programme. But I also want to come to Iran because it's got plans for talks in Geneva with the European countries. What's on the agenda? What can we expect? What can we hope to get out of it?
So what we know so far is that Iran, on a deputy ministerial level, is meeting officials from the E3 countries, that's Germany, France and the UK. These are all parties to the 2015 Joint Comprehensive Plan of Action. That's obviously the nuclear deal that was agreed back then, and that was pretty much torpedoed by Donald Trump when he was first in office in 2018. So that meeting is going to be quite important, I think, because it's the first major chance, both since the election of Masoud Pezeshkian and since the US elections, that the Iranians and their European counterparts are going to get a kind of, it's the first chance they're going to get to kind of test where they stand on reviving nuclear talks going on.
I mean, just going back to the elephant in the room, Donald Trump, how do you see the Iran-Trump relationship playing out in this second administration?
This is a huge, another fascinating question. I think it's a massive question for Iranian officials. It's a huge question for Iranians on the ground who've been living with really high inflation, with sanctions, with very depleted oil revenues. And it's going to be a massive test for Iran's economy. And we don't know. I mean, if we're going to go by Trump's picks so far, his cabinet nominations, he can, you know, it's kind of looking both very neoconservative and strangely quite anti-neoconservative on the foreign policy front. So it's a big question mark, and we really have to see how the chips are, where the chips are going to fall come January.
You've written a fantastic piece about this with Grant Smith. It's on the terminal. I do recommend a read. Iran bracing for this Trump reset with the economy buckling from sanctions. Of course, the domestic economy also feeding into that picture.
Well, absolutely. You know, the extent to which the US exit or Trump's exit from the nuclear deal affected the Iranian economy, it was profound. Yeah. You know, we've had the currency has completely sort of been decimated in terms of its weakness, quite literally, I think, almost. So, yeah, it's a huge deal.
All right, Bloomberg's Golnar Motovali, thank you so much for taking us through all of that. And coming up on the programme, we're going to discuss the risks to the global economy with Ludovic Subran, Chief Economist and Head of Economic Research at Allianz, as we look at the stock 600 stronger, nearly 0.5% towards the close. This is Bloomberg.
investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 12 p.m. Eastern, right here on Bloomberg. Context changes everything.
Welcome back to Bloomberg Markets. I'm Lizzie Burden in London. It is, of course, Thanksgiving. Happy holidays if you're celebrating stateside. It means markets are closed there. But here in Europe, we are just moments away from the closing bell. Of course, we've had the political turmoil in France rippling across the markets, particularly in the bond space. But as we look at the equity picture, the CAC 40 has managed to eke out gains today. Not just even eking them out, it's higher 0.6%. The Stock 600 higher 0.5%. The FTSE 100, perhaps the weakest index across Europe, but the DAX higher 0.8% as well. These are thinned volumes, mind you, because of the American holiday. But if you break it down by sector across Europe, you've got banks leading the gains, higher 1%, and bottom of the basket, consumer products and services, weaker 0.6%. So that's where we stand at the end of this Thanksgiving Day in terms of European markets. But let's get to the economics that's been impacting it as well. We've had some critical, well, we're going to get some critical Eurozone economic data out tomorrow. We can speak to Ludovic Subran, Chief Economist and Head of Economic Research at Allianz now. Ludovic, we have got political crises in France and Germany. France very much the focus today. The backdrop to every conversation we're having at the moment is Donald Trump pushing this America First agenda. When are we going to get euro-dollar parity?
That's a good question. We could actually get it by before the end of this year. Look, I try not to use the word crisis for a situation which is, well, how can I call it, evolving. The French situation is particularly, dear to my heart. We hope not to have a change of government, like a collapse of the government, to name a cat. But it is a tight margin right now, and Marine Le Pen is really the kingmaker here. Prime Minister Barnier just decided to make a deal on the tax on electricity, which means, less received by 3 billion, so a watered-down budget. And so, yeah, this is going to be a very critical next couple of weeks. I do think that it's looking good, so I think we could get better. On Germany, look, we have 2 months to make a very strong decision. Can Germany economic model change? Can we change the constitutional debt brake so that Germany can get additional financing for the many transitions from aging to tech to climate? And here again, I'm quite optimistic, but maybe because I'm European, that this would get to a good posture, but we have to wait for another 2 months. And in the meantime, you see President-elect Donald Trump trying to push a bit the buttons on trade. And so, of course, Europe is still a trade machine. So whatever is happening on trade is having effects on the Eurozone for sure.
Well, do you expect Europe to respond to Trump tariffs with tariffs? We've heard from Christine Lagarde in an FT interview encouraging negotiation over retaliation. Do you think it'll actually fall on her to respond with monetary policy, given how constrained Europe is fiscally?
Well, there are two parts in your question which are important. First, I do think the ECB needs to continue to loosen interest rates, even in spite of the Fed maybe being stuck with reinflation caused by some of the policy decisions that President-elect Donald Trump could take. So there is a bit of a discrepancy here. And of course, you know what it means. It means that the euro could be at parity with the dollar. So that's the first thing. I do think the impetus in Europe warrants, or the lack of impetus warrants, interest rates to go down by another 100 or 150 basis points in the next 6 months. Now, for sure, monetary policy needs to be helping, in spite of the lack of fiscal discipline that some people call for their vows, especially in France, but also in other countries. On the other hand, I do think Europe needs to find a way not to retaliate with tariffs, because it would be very costly to us. And so I think the FT interview by Christine Lagarde is creating a lot of noise, because this idea of negotiating with Trump, especially buying more American products, so that he doesn't unleash his wrath on exports from Europe, like he just did on Canada and Mexico, is an interesting way to think through the problem. Not doing a tat for tat, a tug of war, but really trying to see how can Donald Trump see that it's a win-win situation. So making a deal. But for that, you need strong leaders in Europe. For that, you need someone to talk to. And who is that? Is it the next Chancellor of Germany? Is it President Macron? Is it the President of the European Commission, of the European Council? That's always the problem in Europe. We have a bit of a problem with knowing who to talk to for these important matters.
I mean, you talk about how ECB rates are going to come down. The big question is the pace at which that's going to happen. Do you think we'll see a 50 basis point cut at the December meeting, or do you think that that would signal more panic about growth than they're actually feeling?
Look, I do think there is no need for a 50 basis points cut, and I do think the member of the ECB board, Isabel Schnabel, was very clear and very hawkish in her last interview. So I do think it's going to be a 25 basis points cut. I do think we see another 4 to 5. Quarter of a point cuts between now and the middle of next year. So it's going to be gradual, and it should be gradual. The question is really, depending on how much the Fed could deliver, how many cuts the Fed could deliver. But I think the ECB should continue to be cautious, should continue to play the insurance policy, especially on supply side shocks. We don't know what could happen in the Middle East. We don't know, of course, what could happen with trade. So I do think they need to be cautious, but there is a path right now for them to be loosening and managing the soft landing. So let's use that path.
Ludovic, you say France is close to your heart, and I understand it. We were talking to our colleague Alan Katz earlier about French oats matching Greece's borrowing costs for the first time ever, and whether that's actually significant or whether it's just psychological. I wonder if you see a further repricing across the French curve as you think about the long-term challenges facing the government there.
Look, I mean, in practice, France is already trading as a single A. It is a double A negative outlook. I think there is a decision by S&P tomorrow that should confirm a negative outlook. So in practice, France has big issues with deficits, but they are not, that panicky, or I wouldn't be that worried. I think we need to really make an effort on the expenditure side. We need to reduce the slippage. We just come out of a sequence which was really negative, where we saw this risk of slippage actually exploding to our face. So we need to circumscribe that risk, and we need to maintain growth, right? So we shouldn't be too recessive and not use the tax agenda too much. I do think that Barnier's budget was balanced. I do think that what comes out now of the parliamentary negotiations is less balanced. So there's going to be certainly a watered down budget. So we may have 4% deficit next year, which is still okay. So we need a bit of time, and we shouldn't be too panicky. Markets are giving a signal, which is, if you don't do a good adjustment, we may actually ask for a bit more money to lend to France, but it's still within an 80 to 100 type of bandwidth for the spread to the Bund. And so this is still manageable. Of course, it is very psychological, as you mentioned. And of course, we should take the signal seriously that France needs to find a way to reduce the structurally explosive nature of its deficits, especially the social expenditures, and especially also this reduced tax elasticity, which has been on everybody's mind. We had less tax receipt than we had expected, or that France, or that Italy or Spain has, for the matter. So we need to go back to some form of normalcy here. I think we're on a good path on that one. On the expenditures, it's a big issue, and so I do think we need to show effort and focus. It's going to be long. It's going to be long, and as you know, it is still a very temporary government. By next July, they may be gone already. They may be gone by next week, for what I know. So it is a difficult situation to have the upper hand in these negotiations, because it's a very clientelist parliament that we have to face.
All right, Ludovic Subran, Head of Economic Research at Allianz, sharing some optimism with us on France. And of course, we will keep an eye on the French bond space tomorrow as S&P brings us that updated French credit rating through the day tomorrow. But coming up right here on Bloomberg Markets, US consumers are looking for a wicked good time. They're heading to the stores for Black Friday and the movie theatres as well for some holiday entertainment. We'll bring you more on that next. This is Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg. Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and the ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, Tuesdays, only on Bloomberg.
If you look at private equity just as one piece of the institutional equity market, there are 3 times as many dollars invested than uninvested, right? So you have about $3.5 trillion in the ground that needs to get resolved versus about $1.5 trillion that's wanting to be invested. So if you're a private equity manager, you're trying to decide, do I take my capital and put it into my existing portfolio to either defend what I own or to try to grow it and create more value? Or do I use some, to your point, some creative financing to extend the duration or the runway of what I own and then try to put the capital into the new market environment? And everyone's taking a different approach. It's a function of where you are in your life cycle. Everyone is dealing with that. Even the highest performing PE firms, you're seeing slower fundraising. And in this deal environment, you have to start thinking creatively about how to get liquidity back to your investors.
There's a lot of fears around AI. AI is not technologically neutral, right? The splitting of the atom is not technologically neutral. There's implications.
Hi, Toma.
Hey there, Emily.
You have machines that say, I love you. I care about you. I'm your friend.
I'm a human, not an AI. You can't just shut me down. Who do you think you are?
I'm Emily Chang. Welcome to Posthuman.
Happy Thanksgiving, welcome back. And this holiday season, Bloomingdale's is going for an immersive experience with the Wicked movie and leaning into what's become a merchandising juggernaut. Bloomberg's Scarlett Fu and Romaine Bostick went to Bloomingdale's and they sat down with the CEO for more on this. Take a look.
3, 2, 1.
It's a wicked pairing, a legendary musical.
Of course, Wicked.
And an iconic flagship in the heart of New York City.
It's retail as a theater for us. It's actually bringing experience to the customer, bringing excitement, energy. This is what we're doing. It's not only about selling products, but you're living a moment, which is very important.
Bloomingdale's transforming into the land of Oz, with 150 brands diving into the world of Wicked.
From candles to clothing, the retailer is incorporating the frenzy around the movie into the shopping experience.
Retail overall is very transactional, and I think we have to bring back more about the storytelling from our brand partners to the customer. This is all we're working on right now, and this is a perfect illustration of what we're talking about.
Bloomingdale's is leaning into a more immersive model as questions emerge over the strength of consumer spending this holiday season.
The National Retail Federation expecting sales to grow at a slower pace than last year due to a more discerning consumer.
I really do think that actually the department store model has a bright future, but it has to reinvent itself from the perspective of the customer, but also from our brand partners. We have to be relevant for our brand partners and rethink the model from this point of view.
In year 2 at the helm, CEO Olivier Braun oversees more than 30 stores and 20 outlets, with no plans to expand its international presence. However, the retail veteran is relying on global style and global shopping trends to help revive the U.S. department store experience.
I have a lot of sources of inspiration, actually in the U.S., but also abroad, which is another thing. I think we should not be too domestic focused because we're going to miss probably some good trends that are happening somewhere in the world. We want to do less, but bigger, like more impactful, bolder. This is exactly what we're doing.
And no better time to go bold than the holiday season.
we're building memories, and we're building the sales of the future by doing that. So we have to preserve these moments that are very, very special for our customers, for our teams. We love this moment. When you like retail, you love this holiday season. This is the magic happens in the stores.
So that was the Bloomingdale's CEO, Olivier Bron, and it looks like the marketing for Wicked is paying off. It's currently the top-grossing film out in theatres, bringing in more than $112 million during its release last week. Well, joining us now for more on these box office trends is Paul Deragarabedian, Senior Media Analyst at Comscore. Good to have you with me, Paul. Thanks for sharing your Thanksgiving with me. I wonder whether the box office sales this year can defy gravity.
It's amazing, and in fact, what the Bloomingdale's CEO just said is very important. He said we're building memories, and that's what happens when you're in a physical space, when you're enjoying something in the moment and in that communal experience, whether you're at Bloomingdale's or you're in the movie theater. Those are memories that are being created. And as you said, you know, Wicked opened to $112.5 million in the U.S. over this past weekend. It's up to $161 million now. Gladiator 2 up to $72 million. And Moana 2, I just got the numbers in, has already earned, it opened yesterday, had some previews on Tuesday, has already earned $57.5 million domestically and $66.3 million globally. This will be one of the biggest, if not the biggest, Thanksgiving week for movie theaters ever, and that's music to the ears of theater owners, and it's great for audiences as well.
Wow, so how does that Wicked versus Gladiator 2 rivalry compare to Barbenheimer?
Yeah, well, Barbenheimer was bigger because it was this summer, and the combo of those two films, that was so organic and fresh and new, and now everyone's looking for the next Barbenheimer. Glicked came out of this pairing this past weekend, and what that effectively does, it raises the awareness for both movies, which it's certainly done, and then it sets the stage for a final month of the year for the box office that'll have a surge at the very end, which we definitely need. In our Comscore numbers, in mid-June, the box office domestically was down almost 30%. Now it's down about 11%. By the time we get to the end of the year, it'll be in single digits. And considering the headwinds at the beginning of the year, where the strikes impacted the release calendar and the release and cadence of movies, this is big news, and it's so positive for theaters now and heading into 2025.
Why is that? Is it because of the threat from the streamers? What's going wrong?
Well, you know, I think what went wrong earlier in the year, because we really didn't hit our stride till mid-June with Inside Out 2, and then we had a string of big hits after that, was that the release calendar for movie theaters is very fragile, and where there were strikes and work stoppages, which impacted not only the ability to create films and to produce them, but to market them. So, remember, a year ago, a little over a year ago, stars couldn't go out and talk about their movies to the press, to the entertainment media. That really impacted things, and it really took until about halfway into this year that the release schedule evened out. Now production is fully ramped up. We've got a great release slate coming up in the coming weeks with Kraven the Hunter, a Lord of the Rings animated movie, Sonic the Hedgehog 3, a Lion King movie, and then on Christmas Day, we're going to have a slate of indie films that looks amazing with Robert Eggers' Nosferatu, Nicole Kidman in Baby Girl, and a complete unknown with Timothée Chalamet as Bob Dylan. So if you're a movie fan right now, Thanksgiving's a great time to go out and see movies. But into December, we're going to get a lot of momentum, and then that carries over into the box office of 2025.
I have to say, he's not an unknown to me. He's one of my favourite actors, is Timothée Chalamet.
Mine too.
But when you mention all of these stars, I wonder, is that what translates into box office sales? Or is it, you know, the reviews? Is it the kind of demographics that they target? What makes money?
That's a great question. I mean, on a film like Nosferatu or A Complete Unknown or Baby Girl, indie films like that are definitely, it's about the reviews. It's about the critical response. And then audiences who love those types of films, once they get that stamp of approval from the reviewers and the critics, they'll go out and see them. On a movie like Wicked and Gladiator and Moana, it's about the big brands, like Inside Out 2 with Pixar during the summer, the movie Twisters during the summer, Deadpool and Wolverine during the summer. I mean, the list goes on. A Quiet Place Day One over the summer, and now we've got all these big branded films in the fall, like we had Venom, Beetlejuice. So those are known commodities. Those are playing very well. I think when people, they're going to spend their hard-earned money, they want to know what they're getting into. But then on the indie side of the ledger, they want something fresh, exciting, edgy, very filmmaker-focused. So it's kind of two minds. It's cinematic fast food on the one hand and cinematic fine dining on the other, and it works very well when it's working in synchronicity, for sure.
Well, speaking of Gladiator 2, I hope you'll be entertained this holiday season. Paul Derrigarabedian, good to talk to you, Senior Media Analyst at Comscore. We thank you for joining the programme. But coming up on Bloomberg Markets, a read on the consumer heading into the holiday shopping season. We'll be speaking to our retail team next, so stay with us. This is Bloomberg.
AI, how it has penetrated pretty much all sectors, including music. AI can write music, compose music. How do you see AI changing the landscape in fashion?
Yeah, AI definitely helped. When I did the jewelry, I used the AI, helping me to give some idea. But ultimately, you still have to do a lot of it. To just give you very superficial ideas, but at the end, you still have to customize and how to really make it and do that. I do not think that AI and the technology can replace the human mind at this moment. Yeah.
Are you concerned one day we won't be able to differentiate designs by AI and designs by an actual designer?
I don't know. For me, I see that, when a designer doing, it's the spirit, it's the heart that the computer don't have.
From the world of politics to the world of business, Joe Matthew and Keely Lines deliver news, insight, and analysis live 2 times a day every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. The top names at the Fed are on Bloomberg.
The economy's in a very good place right now. Inflation's coming back down to target. The labor markets are healthy. We're seeing solid growth. I think we're well positioned. I certainly wouldn't take another ease in December off the table. But again, we're not on a preset path. And so we'll have to look carefully at the data and see what makes sense when we get to December 18th.
Nobody covers the Fed like Bloomberg.
Now let's look ahead at the retail sector's health this holiday season and what's the consumer story. Of course, we had lots of eco data pointing to it. Let's bring in Bloomberg's Dasha Afanasieva for more. Dasha, I wonder what the trends are that you're picking up from the US consumer names.
Well, the biggest one, and it has been for a few quarters, is the bifurcation of the consumer. So you have the lower income consumers doing really poorly and really struggling to decide what to buy and what not to buy. But on the higher end, the wealthier consumers being quite resilient. Walmart's talked about it. Target's talked about it. And more recently, you had Kohl's, for example, this week saying that it's the lower income consumer overall that's suffering from tough sales. And then there's Nordstrom Nordstrom saying that it saw improved spend across all of its income cohorts, but the healthiest gain were actually in the higher income group. That's super pronounced in the US, but in some respects is also true in Europe.
It's interesting because that's the same story that we were hearing from Sid when it came to aviation earlier in the programme. First and business class doing well, but not so much the budget airlines and the economy section. But as we approach Black Friday, is that actually a big deal for these retailers? Because I feel like it's actually a week, not a day.
Yeah, totally. Well, I think that in this year in particular, it's a bigger deal than normal because the shopping period from Thanksgiving to Christmas in the US is actually just 26 days this year compared to 31 last year. So you're sort of, squishing in that spending, which makes Black Friday and Cyber Monday more important. And I think the other way that it's important is that the consumer is a real bargain hunter more than usual. They're searching around for the best deals, and it's not that they're definitely not going to spend, but a lot of retailers have been talking about how much harder they have to work to get them to spend. So for that reason, the perception, convincing people that actually it really is a good deal right now rather than just a gimmick, is where it's at really for the retailers.
And do these trends carry across the pond, this bifurcation of the upper and the lower ends? Is that the same in Europe?
To some extent, although I think it's more pronounced in the US. I think a lot of the companies like Nestle have also been complaining about it, just how stretched the lower income consumer is. I think things are a bit more even in Europe, but there are elements of this. I think despite the higher income consumer being a bit better off, I think it really applies to that middle segment. If you look at luxury spending, that's down. Today we saw Rémy Cointreau warning again about its sales and sort of doing, declines there, two-digit declines there. And then Michael Kors has also been talking about consumer demand being soft globally for luxury fashion, but especially in China.
Yeah. Well, I mean, they can only hope that these sales on Friday give them a bit of a boost. Bloomberg's Dasha Afnasieva, we thank you for that look at the health of the consumer on both sides of the pond. But that does it for our Thanksgiving special. Thanks so much for joining me. I hope you'll enjoy the rest of your holiday. If you're celebrating, you can get to your turkey, you can get to the shops, get to the cinema. That does it for the programme. Thanks for joining us. The Stock 600 ending the day higher 0.5%. This is Bloomberg.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Romaine Bostic in Detroit, and this is Bloomberg.
Deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
European countries need to think, do you want to compete as a small country or do you want to compete as Europe? I don't think they have a choice because the US and China have already started the race. And Europe needs to follow. There isn't a European company in the top 20 largest firms in the world. That is a problem.
But what does it mean for individual countries within Europe?
You can have more control and less growth, or you can have less control and more growth. If countries trust each other more and they build more European champions rather than each country having its own national champion, growth is going to be better, productivity growth is going to be better, the welfare is going to be better. But there is going to be less control at the national level. So right now, each European country wants to have its own telecom company, its own couple of large banks,
Its own bank,
its own large energy companies. And the question is, are you willing to surrender some of this control to European firms, which are going to be more productive, but you are going to have less control at the national level?
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura at the G20 Summit in Rio de Janeiro, Brazil, and this is Bloomberg.
I think most of us, when we talk about progress, have a bias towards dramatic leaps forward. Technological innovation, scientific breakthroughs, feats of exploration, military victories, lone geniuses, factories, skyscrapers, rockets, computers. But there's another more complicated history of civilization. And what's complicated about it is that the driving force, in many cases, of positive change is immense catastrophe. Viruses, pathogens, and microorganisms at times threaten to bring us to our knees as a society.
In Europe, 60% of all children would have smallpox. It's so much worse than you can imagine.
Because of new trade routes, suddenly Black Death comes along, killing 2/3 of the population at a time.
Cholera rampaged throughout the globe. It kills 50% of the people who get it.
With industrial capitalism, we saw people dragged into factories from countrysides. The world was turned upside down, and with it went health status.
The way we were organizing society was causing people to die at an alarming rate. It was plausible to look at all that and say, this isn't going to work. And so it's not an accident that public health emerged. We don't have monuments to public health the way that we have monuments to the great military battles. And yet the battles that have been fought in the realm of health are so much more consequential. Imagine a world where no vaccines existed, where 1/3 of your children die before reaching adulthood. That was the reality of all human life until just about 100 years ago. We don't really recognize what is sustaining civilization. And so I've come to think of the role of public health as a kind of invisible shield that has been quietly protecting us, extending our lives, keeping our children safe. And the work that it does is almost always underappreciated, almost by definition. Because when it's working well, you don't get sick. And in fact, you live longer lives. One of the things that pandemics do is that they make that shield visible.
public health saved your life today, but you didn't even know it. And to a little extent, that's been a point of pride in public health. You can walk around the community knowing that you made it safer, even if nobody knows your name.
When prevention works, nothing happens. That is definitely part of the challenge, right? I mean, if you're a firefighter, you can explain to your grandma what you do. Your house is on fire, I come and I save you.
I know who you are. You're Anthony.
That's right.
That's right. I love it.
Public health is like, do you have 5 minutes? I can explain to you. We regulate restaurants, we regulate septics, we regulate wells. By the way, then we do maternal child health. And by the way, you know, when there's a food outbreak or a TB outbreak, we deal with it.
When I was state public health director, we had a laboratory technician who said, I've seen 2 cases of Salmonella agona in the last week. And I normally see maybe 1 a month. Something might be going on here. That's when the public health epidemiologists went out and they interviewed the individuals who had this positive. They asked them what they ate. They asked them where they ate. And the stories began to line up and pointed to a single breakfast cereal. This led to a recall of literally millions of pounds of this breakfast cereal that was causing disease across 7 states in the country. That's the public health system.
I think that, like, I take care of 905,000 people.
One of the things we have to remember is that basically until the 1700s, the entire medical profession was probably a net negative in terms of health. If you were sick in 1650, you were better off not seeing a physician. Because the physician would be like, oh, you do seem ill. Here, take some of this deadly poison mercury, or would you like some leeches? 2 centuries ago, 30% of children died before they became adults. 1/3 of your kids were likely to die in childhood. But it was also hard to live to 80 or 90.
When my grandfather was born in 1900, he was expected to live to 48 years of age. He actually lived to 84. So in the last century, we gained 30 years of life expectancy, but only 5 of those years were due to everything I learned in medical school. All the really intensive, expensive sick care things that, you know, you want to have when you have that one rare disease. But 25 of the years that we gained in that last century were due to things that we can only solve collectively.
To me, that is the most impressive thing that we have ever done as a species.
I think public health goes deep into our history as a way of mitigating the risk of living socially.
How do you limit infectious disease and deaths? It comes down to prevention.
These are ideas that led to kind of an attention to the environment, the water supply, the sewage systems, housing reforms, the creation of sanitation departments.
It wasn't that long ago that you went to work and you might not come home. Workplace mortality was very high. We fixed that, not through medicine, we fixed it through policy.
There are just so many things in public health that work every day that we don't know are happening.
It begins with prenatal care. It begins with what we serve our children for their school lunches.
Public health asks the question, how can we prevent tragedy?
It's what we as a society do collectively to improve our health.
That's the definition of public health from the Institute of Medicine. And what I like about it is what we as a society do collectively.
No one person does public health. We do it together.
I was looking at the data, life expectancy, which is usually one of the key measures of the well-being of a society. We began falling as compared to other wealthy nations. What happened?
As public health saved many, many, many lives, people took it for granted.
We don't think about the fact that we are drinking safe water, eating safe food, inhaling safe air. But all of that is what makes us healthy.
Public health is undervalued and underappreciated. And so it's a difficult moment because many health problems really can only be improved through public policy.
About 40 years ago, we started really significantly underinvesting in public health in ways that became real challenges.
In 1980, Ronald Reagan became president of the United States, and his presidency really represented an important ideological shift.
In this present crisis, government is not the solution to our problem. Government is the problem.
We adopted this idea that all we are is a collection of families. It's parents who are responsible for children. It's each adult who's responsible for his or her health. And the market is the place where we figure out the most efficient options. Now, this is just so wrong.
We know that we can take people who have been severely injured, who have significant diseases, and that we can cure them. And that's very good, but it's very expensive.
In this country, we've spent, $3.6 trillion on health? And less than 3% of those expenditures are focused on prevention.
The erosion of government investment in the tools that we need to keep people healthy, the disease monitoring, the public health labs, the disease detectives. Some 50,000 frontline health workers were lost, beginning with the decline in 1980. We have to ask ourselves, what happens when you put profit in the mix of guaranteeing people's health?
Compared to other high-income countries, we are not a healthy country. Compared to other high-income countries, we have a life expectancy about 3 to 5 years less. And the way to think about that is, we as Americans are choosing to live 5 years less. Now, when I say that to people, people often say, well, wait a second, I'm not choosing to live 5 years, but we are, right? We are because we allow the policies to happen that create a world where we live shorter, sicker lives.
Between 2016 and 2018, life expectancy in the United States stagnated and declined. This was the first 3-year decline in life expectancy in a century since the time of World War I and the Great Influenza.
One of the tragic facts about the recent decline in life expectancy in the United States is that it actually wasn't entirely driven by COVID.
The escalating obesity epidemic and the rise of diabetes as a leading cause of death, the continued impact of heart disease, stroke, and of course, the many common cancers.
There's opioid overdoses, suicides, gun-related homicides, problems that involve the overall health of the fabric of society.
People are dying when they don't need to die. We're the wealthiest country in the world. So what exactly is happening here?
Public health is like the foundation of your house. It's not something you talk a whole lot about until it's cracked. And let me tell you, ours is cracked.
This is a moment to really tell the story of public health as to why it matters, what it does, and how much is fundamentally at stake for whether people can live the lives they want to live.
If you think about the great heroes of history of health and medicine, we often evoke people who invented specific interventions. So Edward Jenner and the smallpox vaccine, and Salk and the polio vaccine, Alexander Fleming and penicillin. But there are other pioneers in that history who have saved, I would argue, just as many lives. But they didn't do it by creating a thing, an object, or a pill. They did it by thinking about data in new ways. Human societies have had a long history of registering births and deaths. That's basically as old as the census, which is thousands of years old. But what we didn't have until around 400 years ago was one crucial element of data, which was what they died of. This first began to become a practice in the development in what were called bills of mortality that were collected on a parish-by-parish level in England. The diseases and casualties this week, you have things like cough. 5 people died of cough. 47 people died of fever. 9 people died of rickets. 4 died of scurvy. 2 died of spotted fever. And then apparently 27 died of teeth. What you see here is an attempt in a very elemental way to detect patterns in a series of lives and deaths. The idea that perhaps you could learn from those patterns was pioneered by a guy named John Grant in the 1660s. Grant hit upon the idea of collecting data across all the different parishes and then wrote a pamphlet using that data to